Now, China's trade surpassed expectations last month as some of the country's strict COVID-19 curbs were eased in commercial hub Shanghai. Exports grew at a double-digit pace, while imports expanded for the first time in 3 months. Although this comes as authorities warn of other uncertainties like surging raw material prices and supply chain issues. Olivia Xiong with more.
As COVID-19 cases waned in Shanghai and the city emerged from a 2-month-long lockdown, China's trade saw a better-than-expected rebound last month. Exports increased by 16.9% in May year-on-year, more than double what analysts had predicted, bouncing back from a dismal 3.9% growth in April, the slowest gain in about 2 years. Imports were also up 4.1% in May on year, exceeding expectations, the first increase in 3 months compared to the flat growth seen in April. The rebound comes after China eased strict curbs under its zero-COVID policy, put in place to deal with its worst outbreak since Wuhan. Mainly as Shanghai's port, the busiest in the world, reopened in the last week of May, with operations back to 95% of the normal level late last month, as factories also ramped up production. But uncertainties remain over high raw material prices and the global impact of the Ukraine war. On Wednesday, authorities here announced a slew of measures to lower costs, improve supply chains, and help companies boost foreign trade. This includes improving port operations, holding online trade fairs, and offering export tax rebates. Efforts to boost China's economy come in a politically sensitive year ahead of a key Communist Party Congress set to take place in the fall. The country has set an economic growth target of around 5.5% for this year, but some analysts think it will be a challenge given China's zero-COVID approach. Although ING Bank adds if authorities take on Beijing's model of COVID curbs, which were more flexible and shorter in duration compared to Shanghai's hard lockdown, this should put less pressure on the economy. Olivia Xiong, CNA, Beijing.